What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market, but because I'm still trying to wake up. That's simply impossible to do. We're doing the video a little early because I'm up. Well, the market's gonna close in like 9 minutes. So maybe by the time I'm done talking, the market will have closed. If not, let's see where it's at. All right. So it says here, S&P 500 fights higher despite job worries, looming inflation reports. So let's see what's going on today in the market. Hopefully you guys are having a blessed day. Hopefully you're in the market. Hopefully you're not straddling the fence. Hopefully you are investing, at least in yourselves. So let's see here. Oh, the iPhone 17 came out. Okay, either way, the S&P 500 rose on Tuesday as investors tried to look past concerns about the state of the U.S. economy. The broad market index gained 0.2%, the NASDAQ gained 0.3%, and the Dow 0.4%, thanks to a surge in United Health shares. So investors worry that the economy may never be holding up as well as previously thought, were exacerbated Tuesday after the Bureau of Labor Statistics updated its jobs figures for the 12 months through March, lowering the total payroll gains during that period by a whopping 911,000. Interesting number. Not only were the revisions on the high end of what Wall Street anticipated, but they were also the largest on record going back to 2002. So I think the economy is weakening. JP Morgan's Chase CEO Jamie Dimon told CNBC on the heels of the report. Whether it's on the way to recession or just weakening, I don't know. Recession, that's interesting. Interesting. This is my second time hearing that word in the last 2 days. If I hear it again 3 times tomorrow, we'll see. Anyway, while the data had minimal impact on stock Tuesday because they were regarding figures from 6 months ago, the report might reinforce calls for the Federal Reserve to be more aggressive with rate cuts this year. The jobs picture keeps deteriorating, and while that should make it easier for the Fed to cut rates this fall, it could also throw some cold water on the recent rally, said Chris Zaccarelli, Chief Investment Officer at Northlight Asset Management. That's interesting. I mean, I don't know. Recession, lowering interest rates, then people start buying stuff. Then either way, that's why when at the end of the video, I always talk about getting out of debt and you having your emergency fund and you're not being in a ton of debt. So when things like recessions happen, you built your foundation so strong to where you're okay. You can survive it. You're not going to be standing in long lines awaiting handouts because you plan for days like it, right? That's why it's called an emergency fund, 3 to 6 months of living expenses. Okay, so either way, it says here, Wall Street is coming off a winning session with key chip makers such as Broadcom and Nvidia helping carry the NASDAQ to all-time highs. Broadcom shared reverse course during Tuesday's session. It's almost like, I believe Broadcom is losing most of its gains from yesterday, but we'll see what happens in the next few minutes when the market closes. Either way, it says Broadcom shares reverse course during Tuesday's session after seeing strong gains in the prior 2 days trading. That's true. That's what I just said. The stock was last down 2%, though its 1 week advance is still at 13%. Okay. So investors are now bracing two inflation reports that could determine what Fed policymakers will do at their next meeting, in their meeting next week. Last week, a surprisingly weak jobs report added to hopes the path for interest rates is lower, but any surprising strength in the inflation reading could throw a wrench in that outlook. The August Producer Price Index report is due out Wednesday morning, while the Consumer Price Index is set to release on Thursday. So the price index report is coming out tomorrow morning, and the consumer price index on Thursday. So if the CPI shows a worsening trend of higher inflation on Thursday, then the market will begin worrying about stagnation, Zaccarelli said. The bull market has been extremely resilient this year, but we could be approaching an inflection point where it is tested again. So hey, we welcome tests, right? There's nothing wrong with being tested. You know, that's what life's about. It's about tests. Okay. All right, so let's see what has happened today in the market. SPLG, the S&P 500 ETF, is up currently 20 cents. The market will be open for another 2 minutes. Broadcom, wow, is down $9.15 currently. It gained like 10 or 11 bucks yesterday, but it seems to be losing its gains. Palantir is up $6.36. Tesla is up 54 cents. FTEC, the Information Technology ETF, is up 46 cents. Nvidia is up $2.45. Meta is up $13.37. Apple is down $3.40. And that's pretty much it. Not a whole lot, not a whole hell of a lot. But I do like to acknowledge, the S&P is currently up year to date 11.45%, and that's major because for first few months into this year, it was barely moving. It was like at 1%, 2%, but it has done a nice rally, and it's now up 11%. Again, on average, the S&P 500 over the last 100 years has brought back a 10% return over the last 100 years. Now, of course, there were some years where it was higher than 10%. There were other years where it might have been lower, but on average, 10%. You're not going to get that in your bank. So if you're not investing your money into the stock market, or at least the S&P 500, and the S&P 500 is a diversified plan. You don't have all of your eggs in one basket, like I invest in Nvidia. It would be stupid for me to have 100% of everything that I invest in that one stock, because if Nvidia goes down, so does all of my investments. So it's good to diversify. If you want to have a single stock, if you've done your research, your due diligence, and you feel confident about it, invest into that single stock. But it's very important for you to diversify your portfolio. And you can do that. You don't have to be the stock picker. The managers of these S&P 500 and these index funds, they do all the work placing those stocks into that fund for you, and diversifying the portfolio, or diversifying the mutual fund, the index fund, so on and so forth. Because when a company, say, not all the companies within the S&P 500 is doing bad that day. Say Nvidia takes a $6 loss, but Broadcom or say Meta gains $20, so on and so forth. And then if a company within that S&P 500, if it's not doing well, it starts to go below the benchmark that is set for companies to be a part of the fund, the managers of that fund will simply remove that company out of it and replace it with one that is up to par. So diversify your portfolio. And guess what? The market has just closed. So let's see what happens. So SPLG, the S&P 500 ETF, actually closed out gaining 17 cents today, closing at $76.52. Broadcom lost $8.98 today, closing out at $336.67. Palantir gained $6.26 today, closing out at $162.36. I remember in my Facebook group, there was a guy, I think it was Jason. He said he bought Palantir at $40, and I had been monitoring it. And I didn't buy it, I believe, until it was $80 a share. And now it's at $162.36. So I have essentially doubled my money. Jason, on the other hand, has tripled his. But yeah, I've doubled my investment, and I continue to invest. Tesla gained 57 cents today, closing out at $346.97. FTEC, Information Technology ETF, gained 41 cents today, closing out at $210.05. I go back to this again. FTEC, I remember, I believe when I bought it, it was at 145 or 150. Now it's at 210. Just like SPLG, I remember when it was $45. I think I started buying it when, yeah, that's when I started buying it. Now it's at $76. Nvidia gained $2.45 today, closing out at $170.76. Meta gained $13.40 today, closing out at $765.70. And Apple lost $3.53 today, closing out at $234.35. So yeah, that's it. So I'm going to end this video. Again, you need to be investing. If you're in debt, which most people are in, you need to get out of it. And the only way to get out of it is by creating a plan. And that plan is called a budget. You need to start planting, in your garden for that future harvest. You need to start investing. The same analogy can go for investing. You need to start investing now for your future. Just like you would need that food that you're planning to grow so that you can eat it. You need to start investing, your money into your future so you'll be able to take care of yourself beyond your working years. Whenever you decide to call it quits and go off to do something else or nothing at all, but enjoy the fruits of your labor. But either way, you need to create a budget. You need to start telling your money where to go so you can stop trying to figure out where it all went. So what I did, I had nothing but my mortgage left, and I paid it off in 27 months. I paid off, either way, close to $300,000, if I remember correct. I can't see the sign right now. Anyway, I paid off in 27 months. Interesting, right? You can do it too. And I grew up with nothing. Nada. I had no plan. I was always good at saving money, but I did not know what to do with money. So when I started listening to Dave Ramsey, that's when I decided to pay off all of my debt. Actually, I had two properties at the time, and I was buying a third one. I decided to sell the two to put more money down on the third one. That's why I was able to pay it off in 27 months. And I also paid off my daughter's car. And then I bought another car. Yeah. And then my organization asked me if I wanted to go overseas for work. And I said yes. I'd only lived in my home for maybe 7 or 8 months, and I left it. Forget that house. And I rented it out. And I rented it out up until now. I've rented that house out since 2019, September of 2019, up until now. So pretty much 6 years. And the renter that moved into it just moved out. And I'm now getting some cosmetic work done to it, and it's going to be rented out again, right? So I did that, and listening to Dave, I wasn't investing, on my own. So since listening to Dave, I opened up my own portfolio or investment account with, there's many out there. Robinhood. You can go with Vanguard. You can open up, creating one of their index funds. Charles Schwab is out there. Either way, so I started investing into my own stocks and mutual funds, and things have been going good. And I'm still saving. I still save. I have more than 6 months emergency fund because I have a plan. I have another plan. So if that works out, yeah. If not, I will probably dial back on my emergency fund and put more money into my stockbroker's account. If that plan, no, my plan is going to work. Anyway, so yeah. So now that I have a plan, I feel good about what I'm doing because I know why I'm doing it. And then I create goals for myself to accomplish. And then when I accomplish those goals, I create another one. Like my goal was to pay off the house. And then when I paid off the house, I was like, okay, so what do I do now? So I start investing more. I see my investments grow. I'm like, okay, so what do I do now? So now I've created another plan. And actually, another idea has been popping into my head over the last couple of days that I may execute, but I'm taking my time. Either way, that's the good thing about being debt free. You're free to think, and you create these options for yourself that were never there before. You can do things that you've never done. You can think positive thoughts that weren't being thought of before because you have that ability to, because you don't have debt looming over your head like before. But either way, you create that budget. Following Dave Ramsey's plan, when you're getting out of debt, you start with $1,000 emergency fund. You stop all investments so you can throw all of your money towards your debt, from smallest to largest. You pay off your debt. You pay off the credit card debt. You pay off the student loan debt. You pay off the personal loan debt. You pay off the car loan debt. You get rid of all debt. And once you paid off all that debt, which may take a while, it could take a couple of years, and it's okay. It's okay that you're no longer investing into your 401k plan for a couple of years, because you might have only been doing company's match, or you might have been only doing 3%. But when you open it back up, now that you're debt free, you can fully fund it or invest up to 15% of your income into your 401k plan or your retirement plan. So either way, stop your retirement plan, $1,000 emergency fund, start paying off all your debt, largest to smallest, or smallest to largest. And then once all your debt is paid off, now you can start investing up to 15% of your income into retirement. Now you can invest into your kids' 529 plan for college. Now you can create 3 to 6 months of living expenses for your emergency fund. And then once you've done that, if you have a mortgage, now you can pay off the mortgage because you have all of this cash sitting around now because you no longer have debt, and you can pay off your home. If you don't have a home yet, save up to 20% down as a down payment. Put it on that home. Make sure that the mortgage is no more than 25% of your take-home pay. So however much money you make a month, multiply that times 0.25, and that's how much it is recommended that you pay on a mortgage or rent, right? And you finance that home for 15 years. Also, if you're renting, there's nothing wrong with renting either. But if you want to own, put 20% down, finance it for 15 years, and more than likely you'll pay that home off in 7 to 10 years. Yeah, so do all those things, and great things will come. You have to create a plan. I would say since creating a plan, since getting on that Dave Ramsey gravy train, like I said, I was offered the job to go overseas, where I lived in the Middle East during COVID. And then I got transferred to Guam, where I got promoted. I've received bonuses throughout the years. I received another, actually I got a nice little, I guess it was bonus / pay raise. Was it last month? Yeah, I think it was last month. Yeah. I travel sometimes for work. I go to Hawaii, as you can see in some videos. I go to Hawaii a lot for work. But yeah, but then other opportunities start to present itself to you, because my mindset just shifts, my attitude shifted, and good things come. Good things come when you create a plan, right? You get what you're looking for in life, is what I believe. If you're looking for trouble, you're going to find trouble. If you're looking for better things will come. You just have to see them when they do. All right, so I'm going to end this video. But invest, people. Get out of debt. Think. So like, comment, subscribe, share this video. Let me know what you think. You guys take care. Peace.